All right, let's begin with this. So, as we could see, the month of September, seasonal tendencies suggest bearishness, right? Over a 30-year period, that's what we get here. Well, technically 15, but yeah. Now, as you could tell, the first 2 weeks first week and a half was stummering, weird movements in the markets, nothing for certain. But once we started this week, I knew we were bearish and on time. It's going to deliver lower. And I expect maybe week 2 or week 4, which is next week, we could probably see seek and destroy or retracement or certain raids on the top, on the highs, fill in with imbalances and continue lower. We'll have to see from there. But let's go back to the charts. Now, I think earlier this week I did post about this fair value gap, this bearish fair value gap, which is noted as a SIBI. I projected on Tuesday that we would go up and raid this high, allowing smart money to accumulate short positions and then to sell off, giving us a easy Tuesday high of the week, Thursday low of the week. Or we create a Monday high, we leave that gap open, and that becomes a mid or not midway gap, but a breakaway gap, meaning it has no reason to get into there. And if it does, I do not want to see more than, how can I say it? Price action to exceed more than 50% of it. If that happened, I would be completely wrong. Anyhow, Monday high, and if we take the low of the week, which occurred overnight, and then let's drop down to the 15-minute. So what's going to happen is the markets are going to want to pull back 20, 30%. Okay? Let's go to 930, 1 minute chart. Let's go 5 minute. Make this easy. So low of the week created right here. And we've been going up since Asia, Frankfurt, London. And once we get to 830, we can see the Judah creating a fractal high just above here. Now, if you're retail, you're seeing this. You've been buying all night. And where are you placing your stops? Right here. Right here. Any considerable salient low. So what is 930 going to look for? It's going to look for sell stops for them to go buy those sell stops and target buy stops. Okay. Not to mention, when you look at the regular trading hours, we've been falling out of our ass for, a few days. So when retail walks in on Friday, they're like, thinking, heavy bearish set right here. Where's 930? Right there. Big down close candle on the 930 opening. Retail's thinking, we're going to keep going short. It's going to fall out of its ass. It's going to keep going lower. Wrong. We already met a lot of liquidity. There's a low here, there's a low here, and on the daily, if we mark out 50% of this daily candle's wick, that right there is considered a premium. And we targeted that yesterday. So I consider that to be full achievement to the downside. Now we got heavy downset movement in the AM session. Then we got the macro session that starts at 950. Okay. From here, we could see that we got a low, high, lower low, higher, is it higher low? No, this is no higher low, then lower high, then higher high. Now, if we take this, I think we break it, barely. This technically becomes a breaker. The rule is that a body close cannot exceed this specific low. And as you can see, it just does it by like a hair. Unlucky though. Typically that when that occurs, it's a failure. Anyways, but from here, this specific high to this low, or right here, that's a market structure shift. Okay. Our anticipation is a retracement to the upside. Why retrace upward? Because that's within 20 to 30% of the range. And what I've started noticing is that within this range, you want to look for reasons of liquidity. We got clean highs here. We got buy stops here. See that? See how it primed it on Thursday and saved it for Friday? Interesting. These markets are not controlled. Anyways, but down here, got the 22 model from ICT. We got a BISI. We got technically two BISIs here. Okay. I'm going to show you just right there. Okay. So if we're going to use a 22 model and we got two fair value gaps, typically you want to find, if you're a new trader, you want to find entries in here, this highest one, with the acceptance that it may trade to the second one. It does. Now, if you notice, support and resistance actually works on certain cases. Why this? Because it's two down close candles. This is a order block. Make that out. OB. And this becomes a propulsion block. What the? Okay. Now, from my experience, order block, propulsion block, man, it's like you could tell this thing is going to go. But what I've noticed in the past is when there is a fair value gap that forms after a propulsion block, you want to get in on that fair value gap that followed after that propulsion block. And as we can see, we found entries here. What's our first target? Right here, buy stops. Buy stops. Because the weekly range has already booked in. Weekly pullback is going to be between 20 and 30%. If you notice, stops dead at 30%. Some extreme cases, it'll go to 40%. But in my 3 to 4 months of knowing this information, I have yet to see that occur. Yet. And I think if it does occur, it's going to happen on a Thursday, not on a Friday. So anyhow, I'm pretty certain you got in early or down here. I'm not too sure what your entry technique was, but as you can see, it went up. Get in here, so forth. Next to here. Buy stops here. TP1 and TP2. Now, I'm going to show you something really cool that I've kind of just picked up on here recently. But anyways, let's say that, let's see, where's 10 a.m.? 10 a.m.'s right here. So let's see here. You want to get in on the fair value gap on the 30-second or 1 minute for this play. And it looks like if you were to buy this, you would place your sell stops here and get smoked just by this right here. So if that happens, I want to see a smart money reversal. And we do here. This fair value gap becomes inverted. Oh, check this out. 3 down close candle into a fair value gap. These consecutive candles are, what do you call it? Is an order block. And you can also refer to this last down close candle as an order block too. Now what's cool about this is you can see we wicked this high. Technically, this is a Reaper inverted fair value gap, technically. So if we measure from the high to low here, oh no, it's not. Okay. So this is just our inverted fair value gap. But you notice how we get a body closure above it right here. Then we trade back down to discount in the range of this series of down close candles. Bodies are stopping much you want to bet it's 50% of this? Yeah, look at that. The bodies will not close below the 50% level. That tells you that this is going to be a strong move. Seeing this real time, extremely difficult. And if you notice, since we wicked this high, these up close candles right here becomes a breaker. Notice how as soon as that happens, the bodies stayed closed within it and continued higher. Oh, we got a breaker with a new fair value gap. Buy. Oops. What does it do? At what time? Let's see, where's 11 o'clock? One tick over. It's within silver bullet hour. This is the last leg before it rallies. Does so, purges these highs because there's sell stops. Ooh, it actually smoked it. Okay, never mind then. So there's protected sell stops right here at this high, rallies above it. Anyone that went short here, you know, those break-even traders, they're getting washed out. Anyone that went short here, getting smoked. And they're scared when they see this. And the reason why you see the markets rally really quickly in one direction like this is because they don't want you. If you were short here, anywhere in this leg right here, they don't want you closing your position. They want your sell stops to be tagged for them to close their longs. Oh, interesting. Then it continues higher. And then you see how at 11 o'clock, we just missed that specific high and they just start trading downwards. This is so beautiful. I love this. I've just recently studied this. Let's make this red. So between 11:45 and 11 o'clock, this is a 15-minute candle right here. From what I've picked up, ICT said that we're going to burn out either the high or the low of the previous 15-minute candle once 11 o'clock hits. Okay. And I think in order to do this, you need to have the seconds charts in order to make this useful. But as you can see, we rally, double top right here. Then we go down, take out sell stops, and in that form, create more sell stops because, you know, oh, we burned this high. Now we're bullish. Oh, here's resistance. So let's keep buying. Retail buys this right here, thinking that it's going to keep going up, and which it does. But where are their stops still sitting at? Yeah. Get absolutely destroyed. So, and then as you can see during the the London close hour, we take the specific high as denoted and let anyone that thought, you know, resistance turns support. And then we got the breakout artist up here. So they're trapped long. Where are their stops sitting? Get destroyed. And then when it happens, lunch hour. I think it starts here and then ends 1 p.m. So we got this range. We got liquidity on the top and the low. I didn't think we were going to take this out because we've met such an extreme level of a pullback, and I wanted to see it take out these lows. And then let's see here. We're 14 minutes in. Okay. And then these sell stops here if possible, in which is so successfully did. I did not short this because I didn't find myself to be comfortable doing that. Anyhow, it traded lower, took out that sell side, and then right here, I think you can see in my trade journal, this SIBI right here was used with the previous weekly opening gap to go lower to take sell side. Why? Because at that time, Dow Jones took out sell side. ES took out sell side. What follows after that, using the six-sister approach? Oh, NASDAQ hasn't taken it. Let's take those lows. And so successfully, it does. I think we took a little nugget on that one. This is demo. So, yeah, that's it. Thank you for watching.